Morning, everybody. How are we all doing? Happy Monday. How is everybody? Why is my camera a little bit off? I'm a bit wonky today. There we go. Don't like being off. How is everyone? Morning, FTNet. Paul, Gregors, how you doing? Right, markets open. Gone long on the FTSE. No pre-market trade on the DAX this morning. It's go away. I don't want to buy a pen. It's a little bit weak on the DAX today. So pre-market range on the DAX really big today. So very, very big 5-minute pre-market candle today, which puts the pre-market range above 20%. So hopefully we get the opening range a little bit smaller. But we'll see what happens with the DAX this morning. But FTSE's clean broken long already. We're 1.5 hour out the top. Coming into this pre-market resistance, let's have a quick look at DAX. So if we can get this TP1 done today within the first sort of half hour, that would be good, because gap fill is now complete. So that's the gap from last week, which we hadn't got back to last week. So Friday, big drop. We had massive strength on the pound on Friday. I'm expecting continued strength on the pound, so potentially downward more on the FTSE. So it would be nice if we can get that target hit and come up into this propulsion gap before that drop back down into these areas here. But we'll see where that one goes today. But quick breakout the top. Morning, James. Morning, Andrew. Morning, Roger. How we doing? So quickly, can start off with the news. We'll go through the usual stuff today. So we're going through the news. We'll go through the position trader account, see where everything is, and usual stuff really, basically, and go through all the zones on the zone trader EA as well. Oh, that's nice. Banked 1,100 quid this morning. That's nice. I'll have a look at that in a bit. Right. So today is Monday, obviously. We've not got really a lot of news coming out today. We've got Schlegel, sounds a bit like Smeagol, talking today at 9:25. So it's potential for a little bit of movement on the Swiss franc today. The Swiss came out last week and said that they're interested in well, they're not interested, but they are not going to rule out the negative interest rates moving forward. So there's potential for downside movement again today on the Swiss if they continue with that sort of noise, which means obviously buying everything against the Swiss franc. Other than that, we've got Lagarde speaking literally in 10 minutes. That might be why we got some odd price action on the DAX this morning. Yeah, not going to get a trade on today. Really, really, really big pre-market movement on the DAX. So these 450 or 45 points on the DAX is 20% of average daily range. We've done pretty much 50 points in that first 5-minute candle before the open, and the opening range is over 50 points as well. So a lot of volatility coming into this DAX ahead of Lagarde coming out this morning at 8:10. I wonder if market's got wind of something she's going to say. I mean, it's the Hungarian National Bank. I mean, it's not really something I would expect to move. But anyway, so that's today's news, basically. We've got 2 talking heads, and that's the lot. Moving on to tomorrow, no news again. We've got consumer confidence, which is very, very hit and miss, but it is red because sometimes it does move the market. So consumer confidence for the US tomorrow afternoon. Wednesday is when the news really kicks off this week. So Wednesday, we open with the Aussie CPIs early morning, forecasting those to tick up, which means potential bullish movement there. Morning, Peter. We've got Bailey speaking in the afternoon. We've got the Bank of Canada interest rates going to be dropping another 0.25%, followed by the Bank of Canada press conference where they're going to outline forward guidance for the next quarter. Then we've got the Fed rate, which is remaining the same on Wednesday evening, FOMC, with the FOMC press conference. So that is the largest volatility. I mean, that is always the largest volatility news event of the month. Every month, literally, that is the biggest mover of everything. This is going to be potentially the biggest ever mover of everything, because obviously Trump is on board now. And Trump has come out and said, in no uncertain terms, he will be talking to Bailey about this because he wants this down. So Bailey's coming out, Powell. Powell is coming out and saying 4.5. Trump wants this way down. So there's a fight going on between the Fed and Trump, and obviously Trump wins everything. So either Powell is getting sacked or Powell is going to do what he's told. Whether or not he will do what he's told this release or next release, we'll have to wait and see. So there is I never want to put a percentage on anything, but I would say a 50-50 shot of this not being a 4.5, this being a 4.25. So it's very, very tricky this week with this. If that comes out unexpected, or if there's anything in the press conference that comes out unexpected, or if Trump tweets around the time that Powell is talking with something unexpected, we could see a 300-400 ADR move in the US dollar this week. It may not do anything. We know, it's news is news. You just don't know what it's going to do. But we've heard lots of rumblings about Trump wanting to change stuff. So this US dollar is an absolute time bomb at the moment. It's absolutely impossible to tell whether it's going to explode or collapse. Anything could happen at the moment. Plucked out 25% tariffs on Colombia over the weekend. What do you mean you turned our plane around? Screw you, 25%. That sort of stuff he will do to any country. It only takes him to do it to Europe or the UK or another big trade partner. The dollar's going to collapse. So just got to be very careful at the moment with everything to do with the dollar. Moving on from there, we've got the rates for euro coming out on Thursday. So 2.9, we're dropping another 0.25% on that. So again, potentially selling into the euro this week ahead of Thursday. We've then got the GDP and unemployment as usual. The ECB press conference where Lagarde will lay out forward guidance, where we'll find out what Barry Man is wearing on Thursday. And then on Friday, we've got a lot less GDP, PCE. So Friday will be sort of the calm. But we have got the preliminary CPI numbers coming out for Germany as well. That's released in 6 states. It comes out sometime in the morning. It's never accurate. Barry Man is wearing a suit, as he's just said in the chat. Morning, later on. So yeah, we'll see what happens. Whether Barry Man will be bald, whether he'll be wearing sunglasses, you never know. If you haven't been in here before, you don't know what I'm talking about, watch the ECB press conference. All will be revealed. Right, so yeah, so Wednesday, explosive day. Absolutely huge news. We've got CPI followed by interest rate, followed by interest rate, leading into interest rate. Yeah, so it's all happening Wednesday, Thursday this week. So when we get FOMC week is always impossible, but usually always one of two things happens. You get a run in one direction or the other ahead of FOMC and a reversal, or you get an accumulation ahead of FOMC and then a move. So the market really does one of two things dependent on whether it's scared or whether it's confident. So we'll have to wait and see what it does today. So far, there's no ADRs. Obviously, markets literally just opened in the UK. So, we'll see how it picks up today and see what the New York session is more likely going to do. See what this FTSE's done. Yeah, pulling back on the FTSE. I'm expecting more strength on this pound this morning. So no trades on the DAX today. These ranges are too big. If you are taking the 5-minute ORB, you may have triggered short on that, depending on what your offset is at. Probably did. So you're probably short on the DAX. But if not, excuse me, frog in my throat. You got the 5-minute ORB there. See what happens. There's a lot of volume coming through, and we've got Lagarde speaking, and literally she's just about to start speaking now. So we'll have a look at what happens with that. Just quickly look at the longer term. Yeah, so we're pulling back. Remember I said last week, 9 days up is enough. It's not going to be able to survive much longer. So this is the start of the pullback. So it's a case of now judging what the pullback's going to be. Obviously, this is your last propulsion breakout of accumulation. So that is your downside 71.9 pullback. Obviously, we got roughly 50% retracement into propulsion here. And obviously, flag break would be into those propulsion gaps there. So one of those three things is going to happen. We're going to cover this tomorrow. So tomorrow's live stream, just for those members. Why am I typing live? We're going to be covering what I'm calling a session on binary markets, how to easily predict the next price move and manage risk. Yeah, so partly what I've just done there, the reason this sort of session's come about is because I had somebody contact me and saying, how can you be so sure where a price is going? How do you get it right all the time? And it's very easy. I don't know. What I do know is it's going up or down. It's a binary market. Yeah, so all it can do. So when I'm doing this sort of analysis, it very easy. I think what he kind of said was it's very easy. It very easily rolls off your tongue what's going to happen. How can you be so sure? I.e., how can you be so cocky about where price is going? And it's it's just experience in knowing that all the market does is move up and move down, and it moves up and down in degrees of waves of price action and market structure. That's all it ever done if you're going back and look at charts. So what we're going to do tomorrow is cover how I look at where price is going, and I see, especially when we go through the zones in a minute, this is what sort of prompted his comment, was how can you be sure? So my question back to him was, how can you be sure unsure, sort of thing? Yeah. One of the two things I say is going to happen with 100% certainty. And if it doesn't, it means it's going to do this. And if it does that, at some point, it's going to do one of those two things. It can only do two things. So tomorrow we're going to be covering that. So the analysis on this, as I just said, is either going to do this. It's going to be a flag break. It's going to be a 50% retracement continuation, or it's going to be a 61.8 bounce. One of those three things is going to happen, because that's all that can happen. We are pulling back. It will be a flag, or it will be a deeper pullback. So your decision-making process now is, am I going to pick a flag break, a 50% retracement, or a 61.8 for my trade? That's it. But you stop where it's relevant. That's all. That's all you got to do. Very, very, very simple. So we'll be covering that tomorrow in more detail. But we've just broken short. So you're definitely triggered short on the DAX if you are taking the ORBs today. But we're not going anywhere. So we'll see if Lagarde can divvy up this market. She is talking now. The independence of central banks is being called into question in several parts of the world. Oh, good dig against Trump. Central banks may need to contend with lower levels of rational attention. This is a dig at Trump, basically. This is Lagarde having a go at him saying the Fed needs to drop interest rates. The Fed will listen to me. I will be contacting Powell about this, i.e., central banks are meant to be independently running the part of the economy that is to do with currency. Yeah. When central government gets involved in that, what's the point in having a central bank? You have the government just running the country and the currency. Yeah. The whole idea of keeping them independent is so that you've got that balance of scale between the two. Trump is trying to take over the Fed. So this is Lagarde having a go, saying certain parts of the world don't understand that you need separate systems to run efficiently, basically. So yeah, we'll see what happens. I bet Trump fights back at that today. Anyway, so overnight news, there's not really been a lot else. There's a lot of China stuff. Colombia, obviously, it looks like Colombia is rolling over basically on what Trump said about the tariffs, but that was pretty much the weekend's news. There wasn't really anything else over the weekend that's particularly exciting. Trump didn't really say anything else of any interest. We're inside. We're triple inside bar on the open at the minute on the FTSE. So that's your 10-minute and your 15. So that is your 15-minute ORB today. Yeah, it doesn't look like we're going to get target. I think we're going to hedge this today. I think it's more chance of the pound continuing to rally than not, which means obviously FTSE down. We'll see. I mean, it is a big move on Friday. So we'll look at the position trading stuff now. Obviously, there's no ADRs to look at today. RSIs are mainly pound related, and you can see why. Obviously, we had this huge day on Friday on the pound. So all the pound pairs, nice big push up. This is part of this mean reversion leg up into here. This is the buy area from the accumulation. So that's the break there. And obviously this is the add here. So yeah, potentially I've got targets, hard targets set in this accumulation, but I'm not going to take this off. I was toying with the idea of taking this off this morning. I could have banked around about 1% this morning, but I'm going to give this the benefit of the doubt of a pullback bounce here. So I'm looking for the reversal here to hold and us to retest and continue back up into these propulsion gaps here. So all the pound pairs, so pound odd, pound CAD, nice big strong move up Friday there. We got pound Swiss, nice big push, and that's obviously pulling back already this morning. So we're looking for a retest of propulsion to bounce off. However, we are pushing into here, so this could be the sellers getting back involved in this again as well. Pound New Zealand, strong push. So looking for a continuation in this breakout, basically. Pound US obviously looking a lot different because of what's going on in the US at the moment, but so yeah, looking for some kind of pullback on all these pounds and then a continuation at some point today or tomorrow. I will aim to try and get out of this all by Wednesday, because obviously FOMC is potentially going to upset everything. May or may not do anything, but if it does, we need to be aware and be ready for it. So up 12% on the month. There's my current exposure. I'm going to today set up another account because I want to move some capital around. So I'm going to could keep this account going, couldn't I? Thinking about it. I'm going. Yeah, I want to basically set up an ADR account as well to do a variation of the ADR strategy, scalping. I want a short-term position trading strategy using ADR running as well for the live rooms, because quite a few people want to trade ADR and I haven't got ADR running. So I'm going to set another account up to trade that with one of the set files I posted. I'll have to think about how I'm going to do that, because I want to free up some more capital. In fact, I might just deposit into another account. Yeah, forget that anyway. So yeah, so that's what I've got on at the moment, exposure-wise. And I can bank some at the moment, but I'm giving this pound the benefit of the doubt that we're going to continue with the second day. It's the first real proper, if you look at all the other pound pairs, excluding the US, because the US has been obviously the mover. But if you look at all the other pound pairs, it's the first proper bull day we've had on the pound for some time. We had a little one there, which was kind of this bull day here was really the profit take on that leg. So it wasn't really a bull day. This is coming out of an accumulation. So this is a breakout. So I'm assuming this is going to be a breakout that continues and pulls back. So I'm holding all of these at the moment. And we'll see where they go. But your 4-hour RSI extensions, mainly pound base, if we look at the 4-hour charts, you've got the pound odd. Obviously, we're up at the 80 level, so it is due a pullback, but it could well stay embedded up here for a bit, look. And this is what I'm looking for, just a pullback and a bounce up from here. Obviously, that is the 4-hour long-term view. if you're looking at it from a short-term perspective, a short view, that is what you're looking for. Either way, I'm expecting more upside movement, whichever way it goes. Again, stuff we're going to look at tomorrow. It's also extended on the hourly very nicely. We're above the 80 level on the hourly. Sorry, no, it's above the 75 on the hourly. So nicely extended and embedded. Obviously, short term today, there's a high probability of that happening. We could just accumulate, we could flag and break. One of those is going to happen. So there is a good opportunity for a short if you want to take a short on this at the moment. But obviously, I'm holding this reversal alert, expecting more upside. But to get more upside, it's going to need to pull back to get the power to do the move. So that's potentially what we're looking at on the pound odd. Pound CAD also extended on the 4, really extended on the 4 this one because of the weakness in the Canadian dollar. All that talk from Trump about putting 25% tariffs on CAD scared the crap out of the Canadian dollar, and obviously pound has taken advantage of it properly on Friday. So propulsion gaps filled, 50% retracement complete. Good looking short opportunity. That would tend to come on Canadian strength. The problem with that is we've got an interest rate drop coming. So Canadian strength is probably going to be quite tricky to achieve. When you drop interest rates, it doesn't strengthen your currency, it weakens it. So I get the feeling we might get a little bit more upside on that pound CAD. But right now, rules are rules. It's a short. Yeah. So it looks good for a short and a pullback on this, basically. But if you get in and it doesn't get far enough for you to make whatever you want to make, you're going to be looking at pushing up into these two massive propulsion cells up here, and then you've got last month's high. So worst case scenario, you're kind of scaling in to 3/4 positions before you hit the monthly high. And if it is just going to scream in that direction, you're going to do that whole move without a pullback. Yeah. So you know, you're going to be expecting that to happen up there. So those are the plays basically at the minute on the pound CAD. Pound Swiss also extended on the it's done, missed it. Pound New Zealand. See, pound Swiss, you've had a reversal alert. Yes, sorry, another announcement I'll come to in a minute. I forgot about. So pound Swiss, your reversal alert's just gone in there. So I'm going to look at putting a version of the reversal alert indicator into the position trader EA. Not going to use the exact logic that I used here to create this, but it will be very similar. Because a lot of people want to still trade the reversal alert rather than a moving average cross. And the moving average cross is my lazy man's version because I don't think it makes much difference personally, but people do. Mainly the South Africans. It's very odd. South Africans have got a real fascination with anything to do with ICT. And although this isn't ICT, it's very similar, obviously, because it's just market structure, and that's all he does. But they're absolutely convinced that is the only thing on the planet that will ever make money. Yet no one on the planet using his concepts makes money. I don't get it. But anyway, so I keep getting these. Why doesn't it do that? Because it's the same as a moving average. Stick a moving average on the chart. You'd actually got in closer up there. But anyway, so I'm going to try and code something in this week to replicate the reversal alert, but in a different way. What I'm going to do is I'm going to have a time base on it, where after a set hour, we will look for high of day and low of day. And when we get to the low of the day, we will then look for a reversal. The problem with the reversal alerts indicator, obviously, is in massive periods of accumulation, which I'm obviously not going to be able to find on a chart now because nothing's really accumulating much at the moment. That's not too bad. I was just going to try and find one that had both reverse. There we go. So the problem with the reverse alerts indicator is in periods like this, what you do is you get a reverse alert short, a reverse alert long, reverse alert short, reverse alert long, and it's absolutely fantastic. But it alerts too often. And you get very much the same sort of signal from a moving average cross. As I said, this is why I use it in the position trader EA. But what I'm going to do is put something in there so that it's got some kind of trigger. So when you get a new low or a new high of the day, we'll then start to look for that. Very simple. And if it then makes a new high of the day, we'll look for another one. And if it makes a new high of the day, we'll look for another one. But I think it needs a time filter on it because most people are using reverse alerts on lower time frames. So anyway, it's going to be one of my little projects for the week. Pound New Zealand, we've looked at pushing to the upside. And the reason I don't include this in the position trader EA because the logic involved in that is incredibly complex. And that's why the market reverse alerts EA is so slow to test because it's doing lots and lots of calculations. So there we go. Morning, Dallas. JC, was check. Morning. How are you? Right. So there we go. That's all done. Pound odd obviously is the main potential for profit today. I'm looking to get out up here. My ADR target, so basically I'm just targeting an ADR at the moment. ADR target on this is 120, which puts it basically pretty much at ADR today. It's actually there, it's just above ADR, but that is my target today to get out. It's the reason I've decided that's where the EA is going to get me out. But what I've decided to do is put hard TPs in just shy of the weekly high. So this is last week's high. That is last Monday's high. It's basically the open pretty much on Monday. We collapsed on Monday down, look. So that on an institutional chart is a daily candle that could look something like that, yeah? There will be a load of orders at weekly highs and weekly lows. There always is. Weekly highs and lows are magnets for liquidity grabs because there's a lot of orders there from banks and institutions ready to drive the market back. So if they don't trigger immediately, what they tend to do is pop through them and then they trigger the orders down here and off we go. So this is why we get the control candle phenomenon where you get one big weekly candle and lots of that sort of movement inside that weekly control candle, which is basically a weekly range that breaks out. So there's going to be a lot of orders sitting here. So I'm moving my TPs down here because what I don't want to do is go, that's my exit, and then find there's absolute iceberg orders sitting there and we just struggle for 2 or 3 days. And then Wednesday, obviously FOMC, the entire outlook could change. So I don't want to be trying to just grab that much distance for the sake of the EA wants an ADR. I'd rather grab the logical level, which is the weekly high. So that's the only reason I've got that target set there. So hopefully we can get there today. It's only 3/4 of an ADR, so easily achievable. Right, that's those done. FTSE's still trying to go long. We are still inside 5-minute ORB at the moment, so there's no volume today. DAX is pretty weak as well. The guard's obviously not said anything exciting. Has she finished? Yeah, so that's 20 minutes ago. She's obviously finished, or she's not saying anything exciting. Right, so moving over to the zones. Morning, Youssef. No water, and it's Fridays. So just moving over to the zones. Zone Trader EA, I've done 13.5% this month. So good month, not setting in much drawdown. So yeah, we'll go through all the zones, look at where everything is here and see where we're going. So all I'm going to do is just go through the zones. Obviously, if the zones are in place, they were set last week. So there's no point in going over the analysis again because the analysis is the same, although it does change from day to day as we see price unfolding. So obviously with this one here, Aussie CAD, I'm short at the moment, got 3 shorts on. I was looking for this area here originally as a bounce point to continue market structure south. That didn't work, so I looked at this low, which we spiked into, and another entry got taken there, and we are still pushing up at the moment into this accumulation. So this is holding at the minute. This is where they're attempting to get through this accumulation break, which is holding. So they are looking like they're adding more sells in here. If this breaks, we're coming up into the highs. So that's where the next short goes. Targets to the downside. I'm leaving at the moment here because I want to see what it does. And and I want to see what happens with the rates next week, this week. So what I'll do basically is probably on Thursday, I'll be kind of analysing what happened with the CAD and the US, and then looking at targets from there. So at the moment, I'm leaving it at the lows, assuming that we're going to continue market structure to the downside. Yeah. Which means that we're going to put new lows in below there. So if that isn't going to happen, and this is a market structure reversal here, and we've broken up to a new high there, in fact, here really, so that's a new high above this high here. I'll look for it to pull back down into here. So this is where the target would go, somewhere in here, but it's very hard to pick a target in this area. It's just a bit of a mess at the minute down here. This it's been a lovely market structure leg. If you want an ideal example of market structure and what market structure is, it's pretty much there. So this is a reversal potentially going in here. There's your M pattern starting to form. If we break that low, that is a reversal. And then we off down the other way. So I'll be looking at, I mean, any of these levels. There's so many. This is a good low, good level here. We hit that. We resold it. We resold it. We resold it. We broke it, and then retested it and retested it. So this is a good zone for potential target to the downside, which is a 50% retracement. Aussie dollar Swiss, shorts on this at the moment. It's coming down nicely. Need to change to long only at some point. So this, when's the Swiss? 9:25. So we got an hour. So there's potential weakness in the Swiss today. Is this Aussie dollar collapsing or something? Swiss francs rallying. We've got a big rally on the Swissy at the moment. Yeah, so a lot of strength coming into the Swiss franc at the moment for some reason. Obviously, we've got that talking head coming out in an hour. So potential for something happened somewhere. Swedish trade balance. I'm wondering if this is money coming into the Swiss ahead of Wednesday. Obviously, Swiss is a safe haven. So if you're worried about the dollar at the minute, and you're worried about what is going to happen with Trump and the Fed, you want to start pulling out of certain investments and sticking it into safe havens. And obviously the Swiss and the yen are the safe havens. We can probably tell if the yen is powering up as well. This is probably a safe haven run. Yeah. Okay. So this is a safe haven run at the moment. So basically markets are pulling money out of everywhere and sticking it into the yen and the Swiss. Low interest rates, stability. You can't really go wrong. You won't get hurt in the Swiss or the yen if anything happens to the US, the pound or the euro. So this is a safe haven run underway this morning. How big it will be, how long it will last, we'll have to wait and see. So the Swiss yen will be not really going anywhere because there's a lot of money coming into the Swiss. There's a lot of money coming into the yen. So strength against strength equals range. So we're not going anywhere at the minute. So yeah, so something's going on. Markets are just getting prepared, I suspect, for the week ahead with the Fed and all the interest rates. So potentially this one today, we could get a nice big move. Let me just quickly look at where the ADRs are. Whoops. So we're approaching ADR at these lows. So that's the 2-day low, which is the low from Thursday last week. That is ADR today. So this propulsion gap to the downside is where we've rebought it. We obviously have had a reversal alert and retest here. Can't quite see it because it's a bit. So there's your reversal alert and your retest. We've also got a gap down there. So if this is going to continue, we'd be looking for a pullback, keeping this area here probably intact, and then breaking out of this low here, coming down to test these areas. So 150 ADR to the downside, potentially if this does continue this run, is achievable, which is probably more likely this area here. So I'm just going to stick the zone here. I kind of like to be out of this by Wednesday. So I'll look for a bounce out down there on the Aussie Swiss. Aussie New Zealand, I got short on at the moment. It's just not going anywhere. So I'm just sitting in it, waiting for it to come down and either test these lows here, which is that previous breakout, or to push up into this area here above these highs. But unless it does something, I'm just going to sit in it. So that's nothing moving. Out of all the Aussie US last week, new entry taken short. So all the US pairs at the moment, I'm not going for big wins. I'm going for small moves at the minute, just to keep the exposure low, get in, get out, get a bit of money out of it, and then wait and see what really direction it's going to go in, because we just don't know until Wednesday. So this accumulation here, which is this previous support and the breakdown, is where we will probably come and retest again. If it does push up, obviously that is going to be just above those highs, so new market structure high, then a pullback. So that would be my second short. If we do get down to here, I'll flip long. CAD Swiss, got longs on at the moment, so opposite direction. My entry is whacking great, bang in the middle of the gap. So target to the upside is up here. Obviously this area here is previous support. Yeah, so if we get back down into here, I'll buy that again. So looking for buying a double bottom. Obviously this one this week is got the Canadian interest rates. One way or the other, it's more likely going to be bearish. So I suspect I might need to scale in on this for 3 or 4, maybe. Especially now the Swiss franc is rallying. Obviously, we don't know if this is going to continue. This might just be an injection and that's it. And then we'll just sit around and wait. But we'll see what happens. If it does continue, I might get another one on today. If I do get another one on, I might try and get back out in the gap fill. But we'll see what happens with that. Euro odd, shorts on at the moment. Stuck, selling the top of the range. Looking forward to test the bottom of the range until the market proves me wrong. We're range bound, and we're going to stay range bound until we're not range bound. When we're not range bound, we're going to break out, and then we're going to come up and retest those highs. So I'll take another short, move the average up, and look to get out on a retest of those highs there. Euro CAD, another short taken, so need to get another short on. So we've got this accumulation here. Don't think I'll get that on, but this is obviously the low that broke. So that previous high, we hit it, retested, 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 slammed straight through it. This is where all the longs will have flipped short. So this is the sell zone. That's where their sellers are sitting. If they want to remain short and they are still in the market, that is where they will sell from. If not, we'll come up and test those highs and double top. So anywhere really here is the next short. Target to the downside, I'm sticking down there at the minute. It does look now like we're breaking long though, so I'll be looking to adjust the target probably to a 50% pullback if we get up to there, but we'll see where we go. Market will go where the market will go. Euro Swiss looking for longs. Now, do I want to adjust this? How long is this safe haven going to go on for? Do I even want to get in this? I'm not sure I really want to buy into this safe haven run. So I'm going to just get rid of that for the minute. If you want to take a long on this, obviously these highs here and these highs here are your potential support resistance. That one is that we just accumulated around those highs. So we found balance at that area for a few days, about 3 or 4 days, 5 days. And then we broke out. So if this breakout is legitimate and market structure is that, that is where you're going to rebuy it. However, safe haven runs break all the rules. If they are running for the hills because they are worried about something coming, no amount of support resistance analysis or technical analysis are going to help you. If that's the case, it's coming down fast. Don't forget the euro are dropping rates this week as well. Lagarde may come out and say we are way ahead of where we want to be. Interest rates need to come down faster, in which case that's going to weaken the euro. So although this is a technical buy, that as a backup, so that is where I would draw the zone and look for some kind of price action bounce out of there. If the fundamentals are shifting because the euro rates are dropping and something's happening, which means we just need to hold the Swiss for a while, it could well just completely reverse, and that could be your new high. So I'm just going to err on the side of caution at the minute and just leave that alone. I get paid to be long on it, which, you know, is nice, but even so, I do not want to really get on the wrong side of a Swiss rally, especially on FOMC week. So just keeping the powder dry a little bit cautious. Euro pound, those highs obviously are my next short. Exit is the symmetrical triangle break here. So yeah, just looking for it to come back down into there so I can get out of this one. I've got 5 on. I'm not looking for a load of profit. I'm just looking to get out, basically. It's just taking forever. So really good fundamentals with me at the moment. Pound, lovely big strong move, which potentially is a breakout and continuation. Euro interest rates dropping, so I don't see a problem being here. This is the propulsion gap, which broke those highs we accumulated. This is absolutely textbook Wyckoff, if anybody studies Wyckoff. Absolute textbook Wyckoff. So the Wyckoff basically, it's not, sort of. Normally you'd have price action coming down into here. So you've got a run down into an accumulation with a spring, which pushes up into a hold at highs and breaks. So it's absolutely textbook Wyckoff spring accumulation break. So, but it's happened, obviously. We are now here. That was beginning of January. So old price action, but this is definitely where they added to the longs. So there are definitely buyers here. So I am definitely going to get out of my shorts there. Euro New Zealand stuck 3 short. It's just not going anywhere at the minute. So obviously double top turning into a triple top at the highs. This area here is a very good resistance as well, which they're selling at. It's too close for me to get the next position on. So that is the next available high. Pushing down into this area here. It's all I can really see to the downside. We've got this area here as well. So we've got loads and loads and loads of chop on the way. You can pick any of this really for some kind of support, but basically we've got to break these lows. So if it breaks the lows, it's going to come down and look for support. That is the previous resistance, which turned sort of support. It's just really messy price action, but that's where I'll be targeting. Euro US, new short needed. That's too close. You can't see that on the chart, but tells you down in the bottom there that the current sell zone is too low, basically because the low of the box is below the next sell distance. So I can't place my support there, resistance there. So next level up is there. So these highs there. We had a little anomalous spike which couldn't hold. This is an exhaustion, a buying exhaustion spike. This is where the banks and institutions were selling. That's where I'll get in next short. Target to the downside is still going to be this area here, that propulsion gap basically. But we have broken out now of this propulsion move. So obviously we got Euro and US dollar this week. Euro US dollar this week. Good luck predicting a direction. You've got interest rate change and interest rate change. they could do what they like this week. This is going either really far up or really far down, or it's going to really spike a lot and not go anywhere. Those are the three things that are going to happen. So if it spikes up, I'm getting in short. If it spikes down, I'm getting out. Simple as that. Pound odd, I'm long, looking for this area here to get retested. That's my exit, which is pretty much, if you look at the position trade, the other position trading account, I say the position trading account, they're both position trading accounts, they're just different strategies. But if you look at the other pound odd, and where I'm targeting, yeah, so this is that area I've just identified, which is 125 ADR. That is around about 1 ADR. Yeah, on here is that area there. Yeah, so that's what I'm targeting. That's the support resistance. But the position trader EA is slightly different. And I'm just targeting this area here. So it's best of both worlds. As long as we get a push today, I'm guaranteed a profit on one of the accounts. So I don't mind which. And obviously, if it does decide that this is a false breakout, we're going to come back into the range. And if the range doesn't hold and for some reason the pound collapses, I'm going to need to add more when we break those lows. And then I'll look for a pullback. So we'll see where that goes, but stuck. Pound CAD was looking for entries down here. It's not given me because Friday we had the rally. So I'm looking to rebuy the pound. Very hard to pick a decent level on the pound at the minute. So we got a nice symmetrical triangle break down here, which we resold. But obviously now we've ground through it and we've popped that level. Very hard to pick whether this is going to pull back and continue or it's just going to continue. So if it does pull back and continue, I'm guessing I will target the origin of the move, which is there. So this is on a 4-hour chart, that's one great big propulsion gap. Obviously, that's two propulsion gaps back to back there. So that is one big propulsion gap. So let's see if we can fill the propulsion gap and get a bounce back out of that when the banks buy more. Morning, Virginia. So yeah, so that's the plan on that, trying to get in long. Pound Swiss. Again, so this one is a little bit nicer for an entry. So obviously if this Swiss franc strength continues, it will be exhausted by the time we get down here. So I'm happy to enter in off of this support because the structure of this is a little bit nicer. So I will try and go long pound Swiss down there. I'd like to see it get all the way down there, obviously, so I can get an entry on. And then it's a case of, are we now breaking short? And that is the 71.9, 61.8 probably retracement on the down leg. Or is this a market structure break to the upside and then retest to test those highs? One of those two is going to happen. Pound US dollar, short entry, first entry on. I got out the longs on Friday. Yep, Friday. I can't remember. I thought that might have been this morning, but it's not. It's Friday. So target to the downside. I'll leave where it is. Obviously, we got Trump and news this week, FOMC. So if that is a massively bull move on the dollar, I'll take it. I'll take as much as you can give me. If, however, it isn't, I'm going to need to add to the shorts. So that is... I need an option in the zone trader EA to extend that line. I'd like to see that line extended. I'm going to change that. So obviously this high, so we got a high, low, lower high off to the downside. This is a very long extended leg, which has been a really weird kind of pullback. However, if that is the next leg down, obviously I'm short, I don't care. If it isn't, we're going to come back up and we're just going to form a very wide range here. So it could come to that 3-bar reversal. It could come and retest the previous month's high, which is the December high. That's the 30th of December high. So one of those is likely to be next resistance to the upside. So I will just draw the zone around the whole lot. As you can see, that is a double top rejection on the propulsion. So we had a propulsion gap, add. That's where the sellers are. That makes sense for this next short. New Zealand CAD. Morning, Harold. Ryan, I should have took your advice. I've been trying to scalp the 5-minute time frame and it's incredibly difficult. Never again. Yep. It's incredibly difficult to scalp random price action with a strategy that is trying to formulate a plan on something that's random. Yeah. It's just what it is. It's all about risk reward. If you're going to trade silly time frames, which I do, I trade them on prop, but if you're going to trade 5-minute time frames, it literally is all about risk reward. But you have to understand that anything with a 2-to-1 risk reward will always get back to zero at some point. It's very hard to get a strike rate on a random price instrument of any consistency, which is why we position trade. But anyway, 5-minute time frames, hard work. They're very, very labor intensive as well. That's why I don't do it. I'm not old. A lot of people in here probably go, really? But I'm early 50s. Yeah, I'm not old. I've still got lots of energy. I go to the gym every day. I do like 5 hours of cardio a week. I get tired on the 5-minute time frame, and I know people younger than me that get tired on the 5-minute time frame. Staring at a 5-minute chart and analyzing it is mind-numbingly boring, and it just leads to over trading. If you are sitting there watching a 5-minute chart for a signal and your signal doesn't arrive, you have to trade. So you just take something, and it's wrong, and that's what blows everybody up. There are very, very few people that can trade it. I make really good money out of 5-minute time frame on prop sometimes. Other times I get destroyed. But I've accepted the fact that it's random. There is no way to be consistent on 5-minute unless you are part of that elite club of, if you look at somewhere like Top Step, for example, as a prop firm, the elite club consists of around about 30 to 40 traders out of over 300,000 on their books. 40. And you know what they do? They go on the TV channel. And they sit there all day going, I won't take a trade because everybody's watching me until my setup comes. And then at the end of the session, they go, so you're not taking a trade today? Nope. As soon as they go off there, they go, at least I didn't get it wrong. Anyway, when you've been around long enough, you see the same thing repeating itself over and over again. Down. Short. Retest. Downside target all the way down there. So that's the next up I'm looking for a down from. Very easy. New Zealand dollar Swiss. Long taken on Friday. Obviously now we are pulling back. So I need to find a new entry to the downside. Upside target up there. Very simple. 2 upside targets. That's the start of the move. So we should fill that propulsion gap at some point. However, there's a double top, or rather a nice head and shoulders that actually works. Look, there's a head and shoulders that works. I keep going on about head and shoulders patterns and how they fail way more than they work. Way more. There's one that worked. Left shoulder, head, right shoulder, retest of the neckline. I'll give it that as the left shoulder bottom, retest the neckline and down. One that worked. So yeah, next short goes in up there. Exit goes in up there. Upside from down the lows somewhere, I think. Tricky one, that. So we got these lows here which we're obviously rebuying over and over again last week. So I'd have to say that obviously is the most recent support. Obviously, we don't know what's going on with the Swiss at the minute, whether this is a continued and sustained safe haven run or whether it's just a quick move into the Swiss and then it will start to unravel. So I'm going to go with those lows, but anywhere really in this area is potential support. It's an absolute mess. The whole thing is basically a range, and then you've got kind of a range within a range there, which kind of got invalidated a bit, which is the previous area of balance, which they came and retested and rebought. So it's somewhere in here is the obvious spot, and then my next buy will be down there if that fails to get a bounce. But it's a very tricky one at the minute to call because it is just a really uneven sideways mess with lots of different little micro ranges within big range, and it's just a mess. So it doesn't matter though. If it comes down and it does that, I'll get out. If it comes down and does that, I'll get out at some point. It's just a case of waiting for price to decide where it's going, and at the minute it really hasn't got a clue. So we'll wait for it to decide, and then we'll get out when it's figured out where it wants to go. Downside on this target staying the same. Another entry was taken last week at the propulsion fill, which is working. However, we're now running into support. So it may be that they're buying this. So market structure is that. This is where they're going to buy it, and then they're going to come back up and retest that high. So it's either going there, or that is the propulsion sell, which they're adding to, and it's going to come back down and test those levels. So it's either going down there, or it's going to come up into there. And then it will decide where it goes next. New US dollar CAD shorts. I can't do anything with this thing. It's just stuck. I've never seen anything so stuck. Well, I have, but I mean, this is proper stuck. So yeah. Obviously, FOMC and interest rate decisions this week on both of these guys. I've no idea. One of them's it's just going to go somewhere, isn't it? So fingers crossed we get a shock this week on the CAD and or the US, and we get some movement. But I don't care which way it goes. Obviously, I prefer it to come down, but if it goes up, equally good, so I can get another position on and get my price moved, because it's just stagnant. The danger of this is that we start a big move on the US dollar. However, if we do start a big move on the US dollar, we're not going far, are we? Before we hit the April 2020 COVID spike high. So you can bet your bottom dollar there's some sell orders up there. So that's going to be a reaction. So it's just a case of make your mind up. Yeah, either go for it or unravel this leg and sort the move out. But it's stuck at the minute, so I'm stuck with it. And unfortunately, I've got shorts on this. Before I implemented the swap filter, I was trading in both directions. I've implemented the swap filter now because it's just costing me money to hold it. I've been sitting in it, and it's literally just racking up costs. So I want to flip long only. You see, I've got it set there. Need to change to long only. So as soon as I'm out of that, I will change it to long only. Yeah, and I'm not going to go short anymore. US dollar Swiss, target about to hit on that one. So actually, I'm just going to shut it. Or shall I hold it? See, I'm still 0.5% down on this. This is a great indication of swaps and why swaps are so important for swing traders. Yeah. So the swap on this short is 1460, which means that while I'm holding this short, I'm continually being charged additional interest rates to hold the position. If I go long, they pay me to hold the position. This is below my average price. So price is trading here. My average price is there. I'm in 0.5% of drawdown because I've got $150 worth of additional trading costs, which are hidden in swaps. So I've actually got to get all the way down into this support area to actually get the thing to break even. And this is why it's better to trade in line with swap, because it makes your exit so much easier and so much faster. And it obviously costs you less money to trade. As I said, for those that don't know why I've implemented the swap filter on the position trader EA and the zone trader EA, I did an analysis last year on trading costs, and I was spending 30 grand a quarter on swaps in some periods, which is too much. Obviously, it's relative to the account size that you trade, but it's too much. So if you trade only in line with either positive swap or anything what I've picked, $5. So anything that's negative $5 swap is all right. When you get back to your break-even line, you won't have to go far. But anything that gets bigger than that, you start to need half an ADR, up to an ADR of additional movement beyond your average price to actually break even. Yeah. So if you're in a situation where you're in a squeeze with 6 positions like I am here, and we're at a 50% retracement, if it is going to be a 50% retracement bounce and you've got to find another ADR to get out, it's the difference between not getting out and having a massive problem that goes on for weeks more or months more in worst case scenarios, or you're trading in line with swap and you just get out. So it's much easier and less stress-free just ignoring these massive swaps, which is why I'm not trading any yen pairs at the minute because they're too expensive. So I have got an exit, and I will really regret it if this bounces back up and I don't take it. However, we got a bull candle forming, and the hour's just closed. So I'm going to let the market decide for me. I'm going to give it my fate, and I'm going to basically just do this. There we go. So what's going to happen now, because the zone trader EA works, make sure I've got it set up to work. God, where's the inputs for price action? There we go. So piercing into the zone. Yeah, so I've got piercing into the zone turned on. So basically what I've done is I've moved the zone high above the low of that candle, which means that this candle, when this closes, will be classed as a piercing into the zone candle. Yeah. So if it closes bull, I'm out. Yeah. If it closes bear inside the zone. Yeah. So if this is a bear candle, and we now close inside the zone, it will wait for the next candle. And if the next candle is bear, it will wait for the next candle. As soon as we break up above that zone, or we have a bullish candle form within the zone, it will get me out. So one of two things is going to happen. This Swiss franc rally is either going to continue today, and I'll get out somewhere nicely down here with a profit, or it's going to immediately reject this level, and I'll take something in like a 1% loss. But I want out because I'm 6 deep and I need to be out of the position, basically. It's gone wrong. It didn't work. So my goal is basically to get out with as little loss as possible. So if I can take a 1% hit or a 0.5% hit, job done. I haven't lost very much. So that's US dollar Swiss. Need to change to long only, which I can do now because I know I'm definitely not taking another position. And I am going to flip long. So we'll see where we go from there. And that's it. US dollar yen, all the yen pairs. I'm out flat, all yens. I'm not trading the yen at the moment because I really don't know what the yen's up to. I'm also not trading pound New Zealand because the swap costs are too much. So again, pound New Zealand related to swaps, $9.60 to long it, $8.10 to short it. Doesn't matter which button I press. If I have to hold it, it's going to cost a lot of money to trade. So until these swap costs come down into acceptable levels for me, which is under $5, I'm not trading pound New Zealand. There's plenty of other pairs to trade, plenty of other New Zealand pairs, plenty of other pound pairs. You don't need to trade the expensive ones. Keep the costs under control. So yeah, hopefully this Swiss franc rally continues, but you know, this is a hell of a propulsion move gone in. So if this is going to turn into a large propulsion gap like this one, yeah, you're not going to get much more than another hour or two of price action typically. Market won't be able to sustain it. It can happen, but you know, it's more likely going to want to sort of pull back into the propulsion to gather some power to find some opposite orders to go the other way. So there we go. Job done. And I'm flat on the trend pullback strategy. That's good. So 2 grand bank there. Nice. Job done again. I like having jobs done. Euro Swiss, first ADR of the day. So this is the Swiss franc rally. So there's your first ADR of the day. Euro Swiss. So you've got potential to drop down 5-minute chart. Wait for a reversal alert to form on this, which is going to be there. So that'll be your reversal. Back up. Watch that for a scalp exit. Obviously, you've got a gap fill as well. So it's quite small. It's not a very big gap, that. 6 pips. It's very, very, very small. It's less than a quarter of an ADR. So there's a chance that if this is going to be a sustained run, it's not going to come back and fill that gap. But obviously, you know, you can see where we're testing at the minute. So we've got this area, this high, which we hit and we rejected it. And then we tried again and we finally broke through it, retested it, used it as support to bounce off. So everybody that was short here, flip long. This is where they will add if we're going to continue bullish. So you're looking for a pullback short. Again, we're going to cover all this sort of stuff again tomorrow. Everything that I draw on the chart when I'm doing that type of analysis, which is why I keep getting questioned. Well, not keep getting questioned. Why, you know, I was asked, you know, why is it going to do that? It's going to do that because of market structure, because that's all it does. The price moves in market structure waves. It's doing one of, we'll cover this in detail tomorrow, but it's doing one of 2 things. It's either ranging, yeah, or it's breaking out. And when it breaks out, it is either then going to continue to trend or it's going to fail to break out. Those are the only things that can happen. That process causes market structure to form, which is a series of highs and lows. So the market structure is bullish, low, high, higher, low, double top, higher, low, higher, high. Yeah, you don't always, and that's what a symmetrical triangle is a market structure contraction that doesn't form a step. When you look at it that way, and if you look at every chart and think, where is this going next, rather than where has it been, or what does my signal say, or what is my indicator pinging at me, which way is the arrow pointing on the indicator that's pointed on the chart, look at the chart and go, right, that's where they broke out from. It's either going to continue or it's not. And all your job is to pick where it's going next. Formulate a plan, wrap risk around it, and see if it works out. You have a 50-50 shot every single time you do that analysis, whether you use an indicator, an EA, someone's strategy, your strategy, whatever. All strategy is a means to press a button with risk wrapped around it with a forecast. It's very, very, very simple trading. Everybody tries to overcomplicate it by doing all this super, super complex analysis. Yeah, it's either going to where it's been recently, immediately, or slowly. That's all it's going to do. It's all it can do, because it has only got 2 directions. We are on a train. Trains can only go in 2 directions. There's a station here. There's a station here. We're ending up at one of those stations with 100% guarantee, unless it breaks down. And if it breaks down, it's what we call a range. Yeah, on our way to that station and that station, sometimes the train just breaks down. So wait for the train. Morning, Harold. Yeah, definitely leads to over trading. I was taking 10+ trades a day. Higher time frames, less stressful, more profitable. Not necessarily more profitable. Well, it depends how good you are at 5-minute trading, doesn't it? Not necessarily more profitable, more consistent. People should stop trying to be profitable. We should change the terminology in trading from I want to be a profitable trader to I want to be a consistent trader, because consistent traders can't help but be profitable. If you consistently can figure out where price is going and how it's going to get there, you're going to be profitable. If you get it wrong partially, you'll get it right eventually. And this is what position trading is all about, getting it wrong all the time and then going, well, if that's not going to happen, that's going to happen. Because, like I said, there's only two things that can happen, isn't there? US dollar yen. So the safe haven rally is continuing. Yen strength coming through. So be careful with these. I think this is probably just safe haven running for Wednesday, basically. So I think they're probably just driving into the Swiss and the yen just to keep the money out of the US or out of anything affected by the US. So if you think about this US dollar move we got coming this week and the Canadian dollar move we've got coming this week, especially the CAD, because on the 1st of February, if the Canadians haven't plugged that gap to get the immigrants into the US via Canada, he's putting 25% tariffs on them. Yeah. So the CAD, if they don't, right, so bearish CAD, if the press conference comes out as it's not going as well with inflation as we thought it was, that's bearish. And if on the 1st of February they haven't plugged the gap in the border, Trump's going to put 25% tariffs on it. Oh, and did I also mention he wants to cap the oil price at $60 a barrel? What's the main export of Canada? Oil. So where do we think the Canadian dollar might be going shortly? So if you want to get your money out of the major interest rate movers this week, which is the US and the CAD, you've got to put it somewhere. Swiss and the yen aren't going anywhere. Yeah, they're not involved in conflict. They have very low interest rates, very stable economies. Well, to say very stable economies, very low fluctuating economies, put it that way, which is why they're safe havens. So these runs that we're seeing at the moment are likely just, let's just be cautious this week, guys. Yeah, so just be careful mean reverting the moves because it's hard to pick a bottom when you've got a steam train coming at you at 200 miles an hour. So you're better waiting for a really good sort of sit around for an hour or so and then try and get a break of that. So reversal alerts on the lower time frames on these, you're probably going to find it hard to get in on a reversal alert, because the more powerful the move is, the further away that signal becomes. So, you know, if you get another bear candle and another bear candle, that is still the breaker structure there. Yeah. You're just, by the time you get the signal to break the structure, you've missed 50% of the move. So with these today, if you are going to try and mean revert them, you really need to drop down to price action patterns and look for 3-bar reversals. Look for hammers, shooting stars, depending which way it's going, and just take pure price action. If you're using position trader EA and you want to get into it, obviously you could use a buy stop trailing the highs, or just literally just get in. So but be a little careful, because when the Swiss and the yen move together, it is a safe haven run. It's indicative of money moving into safe investments. So stock markets, you'll probably find are on the move as well. If we look at the NAS and the Dow, yeah. So we're ADR on the Dow already. Market doesn't open until 2:30 this afternoon. Yeah, we've already hit the average daily range. We are 175 on the NAS. Holy crap. Oh, it's earnings fortnight. What have we had pre-market? AT&T Post, Verizon and American Express. The other thing that this could be as well is China has just announced a new AI contender for ChatGPT, which could effectively upset the US AI race. I saw it fly past at some point over the weekend. Anyway, so it could be that stocks in Nvidia are dropping. Nvidia are the obviously one of the top 10 NASDAQ stocks. A lot of the Dow companies supply electronics to Nvidia. So it's a sector sell-off in tech potentially happening here because Nvidia make most of the AI chips. Obviously, China could now get involved in that as well. There's a lot of stuff going on, obviously, with what Trump's saying at the moment. So, but yeah, 200 ADR on the Nasdaq before it's even open. Yeah, so there's something moving. So just be careful trying to mean revert things today. Something's not right. Although you have to say that Nasdaq looks like a beautiful long. Look at that. Tweezer bottoms going in on the Nas at 200 ADR. But you have to ask yourself the question, why? If you don't know the answer to the why would it do that? Something is obviously off today. 200 ADR happens 3% of the time. 200 ADR before the market is even open happening, something's not right, is it? So do you really want to try and mean revert this steam train? Yeah, doesn't matter how hard you are, standing in front of a steam train very rarely ends well. Oh, you just missed my target. Well, it hasn't just missed it, it's missed it by a country mile actually. But anyway, so market structure, obviously very obvious. So there's your break high. This is your higher low, looking for test. How many times have you said, I'm not trading the yen at the moment? About 1,000. Because I have to be aware that everybody that comes in here, some people are new. So they're going to go, why is he not covering the yen pairs? Well, I'm not trading the yen pairs at the moment. So I have to confirm it every day. This job, Fagini, you've been in here long enough now. You know that this job is all about repetition and doing the same thing over and over and over and over again every day. You're never going to come in here and I'm going to do something different because this works and this is all I do. So I'm going to do the same thing. I don't know where the yen's going at the moment. Therefore, I'm not trading the yen. When I've got an idea where the yen might be going, I'll start trading the yen again. And then I won't say that. If the Swiss franc suddenly decides it's going to peg itself to another currency, I won't trade the Swiss. And I'll come in every day and say, I'm not trading the Swiss at the moment. And I'll tell you why I'm not trading it. But I have to say the same thing every day because obviously not everybody's in here every day. Right. We are also breaking down into new lows here as well. Look. But this is all going to change Wednesday. Yeah, this US dollar Wednesday is... Just got a feeling about this one. It's the first Trump one. In fact, if we go back and look at the first, this would be a good little experiment actually. There's another ADR just hit there. Aussie Swiss. So they are really jumping on board the Swiss. There you go, Aussie Swiss ADR. If we go and look at FOMC. January 24. January 2000 and when did Trump get in? 2019. 1920. No, it wasn't. 2017, 18, 19, 20, 2019. No, 17. January 17. February 1st, 17 was the first one. Oh, interest rates were low, weren't they? Let's have a look at it anyway. So this is Trump getting in and the first FOMC. So we're looking for 1st of Feb 2017. Why are we suddenly in 2018? Holy crap, look at that. Huh. Wow. That's interesting. Why is that missing? So there's a massive gap in data there on 4-hour chart. Look at that. This is why you do not use your broker data to backtest. Yeah. If you're running any backtests on your broker data and you're with Robo Forex, that is the 18th of October 2013 to the 17th of May 2017. So make sure you check your data. That's wrong. I haven't got the 1st of February on the 4-hour chart. I've only got it on the daily. It's very annoying, isn't it? Can't look at it intraday. But anyway, let's see what happened. So 1st of Feb, October 2013. Why am I all the way back there now? Oh, God. 2015. Sorry, talking amongst yourselves. April. January. Okay, so that's the FOMC meeting there. So it wasn't massive. Look, big bear day. Or was it a big bull day? Which day was it? Big bull day. So that was FOMC. And then the next day, completely undid it with a massive outside bar. So just be aware of that volatility there. But, you know, it's a bit of a different situation now, isn't it? So I'm not sure we can even use that to our advantage. That's the election win announcement, I would imagine. And that's the inauguration. That'll be the inauguration, won't it? That will be the first FOMC. Anyway, what has the past got to do with the with now? You know, we're in totally different situations now, aren't we? By a long way. Andrew, I think I missed EuroCAD. I'm 5 short. So we've just broken out the highs. Yeah, I'm short average there. So we're just breaking out the highs. This is a tricky one this week because we've got the CAD on Wednesday. So we're due some. I mean, the market has already factored this in because the CAD's been fairly weak, but it's very difficult at the moment to tell with the CAD because you don't know whether the CAD is strong or weak because of what's happening with oil pricing, what's happening with what's going on in the US, or whether it's just purely the CAD itself. But the CAD is going to be dropping interest rates, forecast to drop on Wednesday. So there is potential weakness coming through for the Canadian dollar. That's going to move the CAD regardless. And then we've got the euro dropping its rates on Thursday. So what you've got basically this week is a bear against a bear, somewhere around here. Yeah. So Wednesday, Thursday this week, you've got 2 bear moves potentially starting, a bear move on the euro and then a bear move on the CAD, or rather the other way around, bear move on the CAD, then a bear move on the euro. So there's potential for that movement and then that movement. Very difficult to call. We could get them going completely the opposite directions this week. You know, you might get one of them not dropping interest rates. If that happens, it's going to be a massive move. So, for example, the euro decide to drop interest rates, which I think is 95% probability. The Canadians not dropping interest rates, which is a possibility now that they may be looking down the barrel of 25% tariffs, although it's unlikely. But, I mean, if they do that, the US, that Canadian dollar is going to collapse and the euro is just going to fly. So this is going to go off the chart, isn't it? So that's where I see anywhere down here. So if you look at that low, basically we put in. So we are putting in at the moment an outside bar. So you've got this high, this low. Yeah, we've put in a new low down there. We've put in a new high up there. So this is an outside bar on this previous movement, or outside move on this previous movement. It calls for a pullback within to get new momentum to the upside. So if this ends bear today, and we close somewhere down here, it's a very obvious double top end pattern rejection. Yeah, so watch the reversal alert at this level. Yeah, that's your reversal alert for the day. That will be your Batman end pattern reversal. And then we're looking basically to come down and retest this propulsion move where they rebought. Yeah, so this is where the buyers are. That's where your exit will be. 150 ADR from where we are right now. My exit will be somewhere around here with the EA. So I'm targeting 1 ADR. But, you know, if I spot price action here that looks like it's starting to find support at propulsion, I'll get out. But I mean, I might even set some hard targets like I did with the pound CAD. So, you know, this is what trading is all about. Sorry, the pound's odd. You know, you've got to. EAs are great for executing strategy. They're not great for analysis. They're great for identifying entry criteria. But once you're in, the market needs to be read. And you need to see where you think it's going, and where you think it's going, where I think it's going, and where the EA is programmed to exit a position are going to be different things. The exits are always going to be discretionary. No one's ever going to get the same exit because everybody's different. So I'm looking at this because of that weekly high. I might be totally overcautious. I'm also looking at that as a pretty obvious resistance. But we're also looking down the barrel of FOMC this week. So would I rather be flat on this for FOMC in case he sends one of these collapsing into the unknown? Or do I want to go for the home run and try and grab a 4% win? There's no right or wrong, is there? It's either going to get to my target or get to there. Or the third scenario is it doesn't get to either of those. And this low here that we broke, where we are now, remains resistance. And this propulsion move that we've just filled is the next batch of sellers. We're never going to see these again. You know, there's no one that can give you an analysis that is going to make any sense to anybody but you. And if it doesn't make sense to you, it's not a problem. It doesn't matter. This is why position trading is so good, and this is why I encourage everybody in the boot camp to start off with tiny risk, because if you press the button and you've got a load of positions on and it goes the wrong way, it doesn't matter. But what you will do is you will experience market structure, and as soon as you've experienced market structure enough times, you will be able to easily just know where price is going next, because you will see it play out over and over again. So, you know, with the Euro CAD, it's a massive long, which will need a pullback. Where does it pull back from? Resistance. If it doesn't pull back at that resistance, what's it going to do next? Pull back at that resistance. So if it's not going down from here, it's going up to there. So plan that for that. And by the time it gets there, it will be that extended, not that extended. So at the moment, we are that extended, or that extended, depending on where you want to take your low from. And it's either going to do that, or that when it goes down. If it goes up, it's going to continue to go up to there, because there's absolutely no reason for it to do anything else. It could find resistance in that propulsion move, which it's already finding resistance in. But if this doesn't hold here, it means that the guys here selling aren't winning, are they? So they are going to get blown through. And if it blows through that, all the supply-demand traders were going, oh, that didn't work, did it? That's where it's going to head. It's either going to go from the point of supply or demand, or from the turning point where the iceberg order overpowered the opposite batch of orders coming towards it. It's all to do with weight of orders. Banks and institutions put a load of money in that way, a load of money in that way. If there's more of that, it goes up. If there's more of that, it goes down. Where does it go from? There and there. So it is logical that when it gets back there, it will either continue to go from there or it won't. If it doesn't, where's it going? That's all you've got to do. You've just got to look at It's almost, this is why I say in the bootcamp, look left. There's a big slide. I always remember this slide because it took me ages to put it together because I was trying to find a load of really good eyeballs to demonstrate the point that the only thing you have as a trader is the history of where price has been. So you cannot, no one can predict the future. You can only look at the past, and the past leaves footprints. And all you have is a 50-50 probability that every footprint is going to work. And if it doesn't, where's the next footprint? And you just follow the footprints until one of the footprints becomes a boot. And then you take money out of the table. That's it. It's what it's all about. It's staying in the game. Your job is to stay in the game so that you can make this bigger. That's trading. If you want to be laser targeted and go, I'm going to pick that exact turning point, good luck. Carry on trying to do that. But I don't know anyone that can do that successfully and consistently because it's random. Every single day this market opens, there is a different imbalance of orders. Unless you know what the imbalance of orders is, you, me, Barclays, HSBC, Citibank, none of them have got a bloody clue, hope in hell, I was going to say, that was a combination of the two, of predicting where price is going. Because Barclays might be sitting there on 200 million orders short, but they have no idea how many HSBC and Citibank have got. If they've only got 50 each, we ain't going anywhere. If they've got 25 each, Barclays win. But Barclays don't know. They have an idea because Barclays, Citibank and HSBC are all talking to each other saying, can we do this trade at a cheap cost? And we'll go, yeah, all right, you take 25 million, I'll take 25 million, you take 25 million. Yeah, that's what they call over-the-counter transactions. But when the over-the-counter transactions are complete, we then go into open market conditions and that's it. It's all down to complete random. So all you got to do every day is just look at where price has been. And you can tell yourself where price is going next. But which one is a coin flip, isn't it? And also there's news, don't forget. So we got 2 massive news events this week. So I'm hoping that we get negative interest rates on the euro. Lagarde says that CPI is coming down faster than expected. We were thinking it was going to be more sticky. So what we suspect we'll be doing is dropping the interest rates by 0.25% for the next 3 months. Goodbye euro. And I want the Canadians to come out and go, you know what, we were going to drop the interest rates, but with what Trump's thinking of doing to us next month, we don't think we can. So the interest rates don't drop. They actually stay where they are. The market's factored in a drop and they go, holy crap, we need to unwind this and buy all the CAD back. Boom. We're down there. But equally, she could come out and say the opposite. CAD could come out and say the opposite. They could drop their interest rates to 2.75 instead of 3. Kiss the Canadian goodbye. The euro is going to go through the roof. None of that is in your control. So if any of that happens, it's either going to go to the next place where it's going to find the next iceberg order, or it's not. But how long it's going to take to get there, we don't know, which is why trading in line with swap is the thing to do. If it's going to take 6 weeks to get there or there and give me either an extra entry or an exit, do I want to pay 770 to hold it, or do I want to pay 390 to hold it? I want to pay 390 to hold it. Yeah, it's all about putting the odds in your favor, but understanding that it's totally random. You have no choice in which way it goes and you have no way of predicting it. So just get in, cross those and sit. And that's all you've got to do. And like Ryan said earlier, if you're going down to this time frame, you're introducing algorithmic chop into it. And then the difference between trading high and low time frames is very simple. When you scroll out on a low time frame and you look at the number of footprints that are left, it's like following a centipede. Yeah, you got a low there, you got a low there, you got a high there, you got a low there, you got a low there, a high there, a high there, a high there, you got a low there, a low there, a little low there, you got one there, you got a high there which held for a few times, that's a double bottom, you got one there, one there, one there, you got one big one there and one there. That's over the last 5 days. Look how many lines I've drawn over the last 5 days. Jump up to the hourly time frame and look at the last 5 days. 1, 2, 3, 4, 5. Yeah. So you got a low there, a low there, and a low there. You got that high, which is also a low. I've got one level there, and I've got maybe 3 there. I had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. I had 19 levels to trade from 19 opportunities to get it wrong, and now I've got 3. That's the difference between a low time frame trader and a high time frame trader. We can't get it wrong very often. They can get it wrong 10 times a day. If you're risking 1% of your account 10 times a day, you're losing 10% of your account in a day. No wonder 60% of traders lose 60% of their account in 60 days. You're just hemorrhaging cash. Whereas if it gets down to here, I will think about taking an opportunity because it's pretty much done its average daily range, and it's where they bought it from, because that's where they sold it from last time. They couldn't anymore, so they bought it this time. That's the only decision I've got. Go out into a bigger time frame, like the 4 hour, and over the last 5 days, it's just that level. I mean, that looks to me like just one big long move, really. So I've whittled it down to kind of 3 areas I might be interested in buying. Look at the propulsion gaps. That's the easiest way to tell. On the 4 hour chart, look at the number of propulsion gaps we can see at that zoom level. There's one big one, and you got like 2 grey ones here. Got one down there and another one there. But if you go back down to a 5-minute time frame on that zoom level, there's 6 propulsion gaps just today before we even get to ADR. There's 6 areas. Admittedly, that's one big one, but there's 6 areas there that you could potentially make a decision on. What if you get them all wrong? Yeah, this is the problem with 5-minute trading. There's too many signals. There's too much chop. There's too much algorithmic movement. You cannot have anything working. Highs and lows of day, all day long. Yeah, I will look at those all day long. Reversal alert at higher day, high probability. But you're only going to be able to do that once a day, because there is only one high of yesterday, or one high of last week, one low of yesterday, one low of the previous day. Same thing over and over again. Price moves up until it can't move anymore. It moves down until it can't move anymore. This creates highs and lows. High of the day was reactive the next day. Low of the day, we will be watching today if it gets there. High of the day, high of the week, we're watching today. Yeah, 1 decision, 2 decisions. That's on a 5-minute time frame. If you take every little high and low that you see, you will just get killed. This is why people in prop, you see these P&Ls in prop where people go, and I've done this many times myself. You get a prop evaluation and you go, bang, I've made 500. Your target's 2K. Bang, I've made 500. I'm halfway to target. Screw it. Bang, I've made 1,000. There you go, target hit. I've got a funded account. It's taken me 3 days to get there. They get the funded account and they go boom, boom, boom. Why? Because that's a 50% strike rate. You're just trading everything that comes up. The number of trades taken per day by most prop traders is in excess of 10, 20, 30 trades a day. You can't survive doing that because you're making so many trades. The odds of getting a run of 10 going wrong in one go at 0.5% risk to blow the account is astronomical. If you just sold the high of the day and bought the low of yesterday once a day, one of those is going to turn into a 3 to 5R. The fact that you can only take 2 trades a day means that if once or twice a week you get one of those, worst case scenario, you're going to break even because you're only taking a couple of trades. 5-minute time frame makes you overtrade. And everyone will say, yeah, but I wait for a signal. Well, yeah, but what if your signal doesn't come? Well, I don't do anything. No, you don't. You just take a trade. You'll think of because you're waiting for that signal to come, you'll be researching other strategies, and then you'll go, might try that. And then you'll take that one, and that won't work. And you go, oh, damn. Now your original strategy, which was working, it's got to make twice as much money to get back that screw up that you did by pressing a button. And ending the endless cycle of system hopping goes around and round in circles, doesn't it? Our life as traders, system hopping. Stop it. Just press the button and wait. Right. That's all I've got for today. So tomorrow we're going to be covering in the members stream, as I said, binary markets. And basically I'm just going to go through my brain as forget indicators. There's no indicators involved. There's nothing. It's just a case of explaining how the market works. So it's basically, I guess if you like, it's a market structure lesson. It's just market structure 101. This is what it does over and over again. Go and have a look at every chart on every time frame on every single instrument, and you will see exactly the same thing happening over and over again. Your job is not to decide this time which one it's going to do. Your job is to decide which of the two it's going to do and wait for them to play out and move into the market on an assumption. Yeah. So are we assume spells arse of you and me. Yeah. But that is our job. We have to assume that a binary outcome is going to occur because that's all it does. Yeah. So it's all about understanding the odds, the binary nature of the market. And then it's very, very easy to become a trader. And the Zone Trader EA, and I've said it many times, go and get this, download it. Don't have to buy it, just download it and put it in the strategy tester. Use it in the strategy tester. Draw the zones on the chart in the strategy tester. Definitely getting out of US dollar Swiss, look. Unless it closes bear inside the zone. But yeah, just use this in the strategy tester and just place the boxes, speed up the tester, place the boxes, speed up the tester, and just watch your P&L grow. If you do not do anything but look at where price is going and wait for it to get there, because it has to get there. So we'll cover all that tomorrow. I've covered half of it today, but probably a little bit more structured. Yeah, there we go. Right, back tomorrow. Anything you need, let me know. I'll be in Discord. I'm working on loads of stuff at the moment, so I will update you. I've got so much stuff on the go. If for those in the members stream, I'm doing a new ORB EA, which I haven't managed to get any further progress on, but I've got all that analysis to do, which I didn't get a chance to do any of at the end of last week and at the weekend. And I want to do some more work on the position trader EA and add some more functionality into that. So I've got all that going. And also, I've been informed, I don't know if anybody else can verify this, but MQL5 have removed PayPal as a payment method from the marketplace. So I've had 3 people last week get in touch with me saying that they can't buy because they only can use PayPal. Their cards, because they're overseas, they're not able to use them. So I think I'm going to have to start selling direct on my website, which is going to be a massive pain in my ass. But people can't access the products in MQL5 if you haven't got PayPal now. Which is, I don't know whether this is part of new US sanctions or something, or PayPal has decided it doesn't like it or something. I don't know. But I don't know if anybody can verify that. But I've checked and I can't pay by PayPal either. So I presume it's right. And I'm guessing PayPal was the main payment method. So so I've got that to look into this week as well, about doing my own licensing system, which I've got built, but it's not going to be as reliable, and reliability is key in it. So I'll be working on that this week as well. So it's going to be a busy week. Buy a prepaid credit card. Yeah, I have said that to them, but the trouble, Harold, is a lot of people. It's a massive hassle. Like if you want to buy something for $30, and you have to go through the first of all, the process is, and this is, I get this. I had somebody contact me about it, and say they're not the only person in the last week. But you go to MQL5, you try and pay with your card. It says no, and you go, why no? Contact your bank is what MQL5 say. After you've contacted MQL5 and 24 hours later got the response, they say talk to your bank. You talk to the bank and the bank say there's no problem. You come back to MQL5 and they say, sorry, can't help you. Can you pay by another method? PayPal, sorry, we don't accept that anymore. Okay, I need to get another payment method, right? 2 to 3 days have passed. You're trying to buy something for $30. Could you be asked, honestly, to go, okay, I'm going to research prepaid credit cards, try and get one of those, get the transaction from my card onto that card, which is going to cost me a fee, which puts the price of the thing I'm trying to buy up, and then use that card to make the transaction. It's a massive pain in the arse, isn't it? I can take PayPal. The trouble is, I will lose all of the protection and licensing system for all of my products. Obviously, for me, I'd rather not everything be completely free and me have to support it completely free. So to like license it, the way I think I'm probably going to do it is do it manually. So somebody can buy from me, and then I could start taking crypto as well, because a lot of people keep asking for that. Not that I like it, but and then basically what I will do is I will ask for your account number and your name on your trading account, and I will license it to that trading account and that account number and however many accounts you want. But I will manually code that in to your version of the EA, so everyone will have a unique version of the EA with their own thing in it. I have got a complicated licensing system which talks to a licensing server and everything set up. The problem is, if that website has an internet interruption, or you have an internet interruption, that licensing is disconnected and it goes, can't validate your license, sorry, can't use the product. You can't have an EA operating with a licensing system that can have intermittent connection, because if you need to take a trade, you need to take a trade. So I don't want to use that system. I've fallen foul of that in the past, where I've bought EAs in the past, and it's working away, and all of a sudden it goes, I can't see the server anymore, I'm going to turn off. And I'm like, why is this thing not taking any trades? Internet connection. It's like, well, it doesn't work, does it? No licensing server, this is terrible, it can lose a lot of money. What do you mean? No licensing server, this is terrible, it can lose a lot of money. Oh, what, going the licensing server route? Yeah. No, that's why I don't want to do it. But if I can code into the EA, it can basically, when it initializes the EA, it will say, what's the trading account number and what's the name on the account? And you will give that information to me. I will code it in. And then every time it initializes, it goes, am I on account number 12345? Is this guy's name Lee Sampson? Yes. And that's it. It's foolproof. But it's hard coded. The downside to it is when you change your account number, you need a new license. But I can obviously manage all of that. So yeah, a lot of those ones that work. This is why I use MQL5. People have asked me, why do you use MQL5? They're crap. They might be crap, but this is the software we use, and the entire encryption and licensing system is built in here. So when you buy something, it doesn't have to do anything complex. It's all in here. So it's all built in. This is why it's such a nice thing to sell through their marketplace, because I don't have to worry about you having connection issues and all this sort of stuff. And admittedly, every now and again, very, very, very rarely, the MQL5 marketplace will go down. And if you have something where you've updated your software and it needs to re-establish the license connection, but it only does it once, unless something changes, it doesn't do it again, which is why it's so good and so stable, and which is why I've used it all these years, because it is just a really good bit of kit. It might look a bit old, but I'm not interested. A chart's a chart, a candle's a candle. I don't care if it looks pretty. What I'm interested in is, well, I need to be able to look at where stuff is going and where it's been. That's all I need to know. So stability is key, and that's I need to just verify the best way to get that stability into my products, because I'm going to use them. I need them licensed to my accounts as well. I will be the guinea pig. So I've got that to do this week as well. So it's going to be a busy one. But I don't know if anybody else is having problems with MQL5 marketplace, just payments. What I'm worried about is all these sanctions on Russia, because obviously MQL5 is Russian, although they have now just sort of tethered the ties to Russia. The ties to Russia. They're now not based in Russia anymore, all that sort of stuff. At the end of the day, it's still a Russian company. So obviously there's a lot of sanctions flying around, and what I'm worried about is that affecting the MQL5 environment as a whole. But then that would affect every broker on the planet, because every broker on the planet uses the software. So that would be a big problem. And I don't think Trump would really be able to do that sort of thing, because he'd be cutting his own nose off, wouldn't he? If we can't trade his stocks, he ain't going to make any money. So I don't think, and same with Elon Musk, they're not going to turn around and go, let's screw up the retail market. Too much money in it for them. But who knows? Trump. Right, I will leave it there. Anything you need, let me know. I will post what I'm doing today with anything that closes out as usual. There we go. That's nice. US dollar Swiss is now nice. That's a nice exit. Still going to be a loss unless it continues down to ADR. Then obviously I'll get a break even on it. But nice exit going in there. Pound odd I should exit today as well. So we'll be banking again today. So we'll see where we go. But I'll be back tomorrow morning. We'll go through that session for the members. And I'll be back Wednesday afternoon for the next normal live stream. And that will be looking at US markets. And we'll be trading a bit of futures. All right. So have a good day. Anything you need, let me know in Discord. Other than that, I will see you next time.